Mhm. So, how are you, Naveen? Yeah, okay, I'm good. You're good? Okay. I can. Nice. So, we are again recording today's session, and today we will go deep dive into the concept that we discussed last week. We have also maintained a document file so that we can come back. Plus, we have some topic which we have identified that we can discuss today. And I would also like to go with some of the few points out of it. So the topic that you may touch upon today is most regarding power sector, and the topic that I would like to touch today is future of IT stocks, Chinese stocks, and also more regarding what is happening in the crypto world, because there has been some major changes which has happened in the world, right? Okay. First with IT, okay, because I think this is important. Also because we are part of IT industry because of our work, and we do also believe. I mean, we together do believe that something major has happened in recent past, like the innovation which has come up in the world that has increased the automation in the world, and the normal IT consulting firm like TCS, Infi, Wipro, HCL, or in international market is like Capgemini, Cognizant. These company do have impact because the model that they are working in the world at the current world is that they hire people, they train in certain technologies, and most of the people are either deployed at the customer side as human resources, skill resources, or they would have an offshore center where the people will have an office or an ODC where people will sit and work for customer. In either of the cases, I believe that this will change. This scenario cannot be the same, and I do not expect a major change happening in very recent future, like in 1 year or 2 year. But I do believe that whatever the model currently these IT firms has, this cannot continue, right? And when I say this cannot continue, I believe that that is something which will be different in future. And what will be different, I would like to discuss today in the meeting. So what I did recently is I do try to identify if the IT firms that we're talking about mostly do they actually have anything other than consulting business. And I get to know that most of the IT firm like TCS, like biggest TCS, do have a lot of cash and they're sitting on that cash of money. They are not using that money into innovations. I mean, either they are making more offshore centers or maybe they are trying to give more dividends, but mostly they are just making a pile of money and they're sitting on top of it. So the money that they have saved is mostly as earning, they save it with themselves, but it's not been put in the business. That is one thing. Second, the the business model, if we say that the human consulting is 40% and 60% is other than human consulting, it is more than that, or if they say they are also working towards the automation, then I would be more happier. But in my research I do find that they actually are more or less, or either a mid IT firm or a large IT firm, they actually put a lot of effort and money into human resourcing. So in future, if there is a strong um, use case appear where people will have less opportunities to work, these company will have direct impact. So as a business will grow, right? But these IT firms will have major impacts. For example, if there's a company which is using a lot of people for business, so they can say that I no longer have to hire a lot of people, but I can still increase my production. I can still increase my quality of services. Yeah, all those things. But these companies cannot say that because IT firms mostly depend on human, so they cannot say that an IT revolution like happening today with AI will help them. It will not help them directly. Plus, these companies are not in a place at the moment where they say that we will just going to move all the people to automation, or we will also make AI product. They mostly will say in future that since AI technology has evolved, we will cross train our developers and people into that technology so that we can get more product or more projects in future. But in 5 year, if you say a transition period from this 2025 to 2030, I don't believe that if today there's a need of 50 people in a project, maybe in future, in next 5 year, the demand will be like 10, right? In the same project. And so those 10 people will be skillful people also with AI knowledge, but the rest 40 people will have impact. That is one point. Second, IT do employ a lot of people who are non-technical in nature, right? Starting from HR to a business PO to a project manager, right? All those people cannot really get crossed into AI. So there will be impact. Now, why I'm telling all this? Because I believe that the IT has been a wealth generator in past, and the use case where we are preparing is that since market is going down and we have been able to identify it like 2 months ago, good for us. We do believe that all sector will come down, including IT. And what really happened in past is that when IT company, when a downfall happened in a bull run, like in Nifty or Bank Nifty, usually IT or pharma or FMCG turn out to be a defensive sector, which mean that these stocks actually goes up in a bear run. But in this case, I believe that once this beer run for us will be over, maybe in 1 year or 2 year, thereafter IT will not going to be part of the next bull run. And I was trying to identify some reasons to say that why I can be wrong. So the only thing that can happen is that those IT firms which are really into innovation may survive. Example, persistence. So this is also one of the IT firm. uh, these company are not only into outsourcing business, but they also make a lot of products, right? So if there's a company which will in future will be able to align its resources into R&D, product developments, or into AI products, maybe these company will survive. So at the moment, as of today, there's nothing wrong even in TCS or in Fee or Wipro, but I decided to exit from my own portfolio. So this week I have come out of all the IT companies because of two reasons. As I said, first, I know this will come down because everything is coming down anyway. And second, I don't believe that it will be part of the next bull run. So I would like to come out of it and will like to see which will be the major player which will be part of IT in future, which will go up. So to have that view, I think for me it is better to come out of it. And at the moment, IT not has fallen down like other major sectors. Like there are a lot of sectors which are like 30-40% down. But IT is not like that. It is hardly 15% down from the top. So I feel this is one important thing I thought to say with you. What is your take on it?
Mhm. Right, I agree to your point, but definitely see this AI will surely impact us. It's already impacting. I have discussed with our folks in our previous companies as it is recurring. So somewhere they are making changes in the teams. I mean, current implementation, right? The Salesforce implementation where they are having, there are a lot of changes are going on in the product based company. As we are into the service based company, we and our clients are not still not spending that much money on the AI stuff, right? It's very early. So I don't see impact for service based, but definitely product based companies are seeing already this impact where the Salesforce is implemented. That is one thing. Coming to IT, I feel that see, still we have so much things to digitalize. If you think on India, right, there are not so many things are already digitalized, right?
Yeah.
There are many things. It will take like 5 or for example in the power sector itself. Um, There is a smart meter concept is coming on, right? I think you already heard
Yeah, yeah, yeah.
smart meters there. So in order to, I don't know how much digitalization there, but just one example I'm saying.
Mm-hmm.
It will take some time to completely digitalize. See, we are not, at least in India, we are not so much forward compared to other European or US countries.
Mm-hmm.
They have completely, see, for example, if you take any small businesses, right? They have implemented end to end, like CRM systems, even in the small business. Where the moment you go to any business, they will create a record in the CRM system and notification, all those that automation already implemented. Yep. In small businesses, if you compare, but that is not yet implemented here. To digitalize all these things might take to like 3 or 4 years down the line, at least take 5 years.
Mm-hmm.
Simple thing. Yeah. And by the time we move completely for the digital transactions. See, currently still, even though we are having this UPI payments, still there is a cash transactions are still in progress. Mm-hmm. Cash transactions, we have not come completely out of the cash transaction. So that is also another point. It might take 4 or 5 years, right? Completely digital payments. So example, I'm telling you a one by one example. Mm-hmm. So there is a scope, still scope for, that's what I feel. But definitely down the line, things might change, as you said, right? And one thing is that when these guys have so much money, like you mentioned, TCS or Infosys, right? When they are sitting on the so much
Cash reserves.
cash reserve, they can definitely spend the reserves and the resources. Example, pharma company, they have a lot of money, so they are spending on R&D. The same way we have good talent in India, so definitely we can spend some amount of once again. Okay, so that's what I feel. So we can spend the money on the resources and do some R&D there as well, right? If that is the case. Yeah. But definitely, jobs wise, there will be an impact already. Already, I'm seeing that. See, recently, the photo related things, Photoshop, people who are working on the Photoshops, right? Mm-hmm. I mean, the image editing, so they already got impacted. And whatever the online news related uh, blogs you open today, you can see all the images are generated by the AI. It's not like the human is creating the images. Yeah. In most of the portal, it's already so that area they already got impact. And yeah, animation designers and the people who are working on this animation things, they will also slowly get impacted. Yeah. With the advancements. Still, say the current AI state is good for the text, this NLP, natural language processing, right? Mm-hmm, I think. Mm-hmm. So that is good. But when it comes to image, or because I tried some AI systems to generate the images which I needed. Maybe I tried free versions, yeah, but the thing is still there is a room for improvement of that AI systems. Yeah. For image and videos. So yeah, that's what I mean. Mixed. Okay,
I will tell you something, huh? How IT company earns. So normally IT companies earn because they bid for a project, and most of the customers are US based or Europe based. Indian IT company revenue, if you look, then most of the revenue is coming from outside India. There's hardly any major IT company which has business on customer base from India. Hardly. Like they would like to have, but currently they don't have. And second is most of the company which would like to have business opportunities outside at the moment also think that since AI is kind of evolving day by day exponentially, why should we commit for major money? So when this IT firm nowadays now going to the customer and trying to bid for a project, the customer itself saying is that okay, maybe I would like to wait for another 2 3 quarters and wanted to see how this goes. Plus the customer is trying to look into their competitors, like are they also aligning into AI things, or they are pretty much without AI on prem, because that is something which is still acceptable maybe in their business, right? So but that, because of that, all the extra money which customer used to spend previously has stopped, because nobody really has a perfect clear picture in his mind, but they are trying to just sustain their current business. Because of it, the IT companies are unable to get those kind of project or bid for those kind of projects which they used to get previously. So when they get a project, they would go for a project manager, a sales guy will go with the project team. Then there will be a POC stage, there will be some solution architects in picture, then there will be some developers, some testers, offshore, onshore, etc. A lot of things. But a lot of things nowadays, company think that since we already have crunch of money, why would we like to have all those kind of structural team in place? They are preferring a short-term project at the moment, so that the commitment is less. Plus, they would like to sustain with a smaller team. So, an IT company whose major business is to deploy people as service and then get some per hour rate or per day rate out of it and make that money into their balance sheet, that business is getting impacted. So, innovation wise, things can happen. But if you see, previously an ex IT company was able to deploy 1,000 people in a month. Now they're unable to deploy 200 people in a month. So that is decreasing their revenue in total. Now, there will be a intermediate phase, I do believe with you, where because of AI, people will get cross-trained into those technologies, and the companies will look for those skills employee who actually will have IT and AI skill together. And then there will be a rush into the market where people would like to learn, and then the company like IT consulting company will going to make some extra bid for those. Like previously, if they're putting $90 per hour, they would say we have IT specialist who can do the job with you, who can also help with some co-pilot activities, blah blah. And all those things will be cost $150 per hour. So there will be an intermediate period of 1 to 3 year, I believe, even where there will be a huge jump even for IT company. But even as I said, out of 50, 5 to 10 people will be able to make that. Not everyone will be able to get into that phase, because not everyone is developer. Plus, there will be also an edge in the same time where the AI will itself will grow. I mean, if you see even nowadays, right, the co-pilot is pretty good, or even those AI helping tools are pretty good anyway. So there will be a moment when people will, or the business will itself will like to decrease dependency on human as time goes and as AI get matured. So there will be a period, I believe, 2025 to 2028 maybe, where IT will go up again. But in total, the revenue for IT will not really go above what it is today. That's what my belief is. And in the meantime, there will be some cut in between, right? So that the IT can also sustain themselves. For example, they will not hire new freshers this year. Example, right? They would like to hire people in less cost. For example, if people were asking for 100% hike, now people are also okay with 50% hike, or even they wanted to change the job in the same salary what they have, or maybe even less. So all these are possible because the IT company now know that people don't have requirement. So even to increase their percentage of earning, they will decrease the bid that they put to customer, and they also decrease the salary for the employee. So in a longer run, if you see, IT human resourcing is going down, and they are not making anything out of it. There's no proper thing that you will see, like an Nvidia is making a partnership with TCS or Accenture to give services, nothing like that. Even Salesforce wise technology, the CEO itself says we don't want new developers or new people this year. So it is pretty simple and clear that the long term roadmap is with AI. And if I have my money invested in the market and I have a choice, then I would look for computer innovation companies other than computer consulting company. So this is something which I think will fold in future. And at the moment, we don't really know. But what we know is that the next few quarters for IT will be really, really slow. And in the meantime, when the sales and the earning will be less for IT, it will come down. So even if you see my screen, if I would like to make the right chart as monthly, this is the layout we have been using for some time. So IT has been a growth sector from past, right? In 2000, it goes like this because there was an IT.com bubble. So this has happened. But thereafter also, if you see, the IT has been keep growing like this. But I believe that in future, it will come down because of fundamental change in the industry. And if it happen, then to bounce back from a point will be difficult. And I believe that in my portfolio, I don't want to have those companies whose earnings are not growing. Right? In the end, that's the baseline. So it is a thing which I would like to even put as a watch list, that if in future some IT company is making good money, like Signity, Signity Tech.
No.
Okay, this is an company which are working on automation testing softwares. Okay, it's also listed in NSE. So these kind of company I will be more focused on, because these company who are maybe I'm just giving a rough estimate because I don't know fundamental really strong for it, that maybe 60% of the employee are working on automating the software. They are working on that particular front. So when AI will get more mature in IT, across IT, maybe these people will be able to cross train themselves easily, because their main focus itself is not on making services but to make some products, right? So these company will have edge over the big elephants like global IT firms. So I would like to identify those companies in IT, if I have to invest in IT, where they are more into automations, more into products, and more into make themselves ready for AI changes, because technology is changing very fast. Even a company like Intel is unable to cope with Nvidia. So maybe a lot of IT company in future will just go out of the world. Also, that's a high possibility. Yeah. So I think I'm early, like maybe few years early on this topic, but since we're preparing for something for after 2 3 years, maybe this is a good point to have in our topic discussion. Yeah. Okay. So this is I would know.
So you see the long term.
Yeah.
So this is long term.
Yeah.
Patterns, right?
Yes.
For next 5 3 years down the line. So
Uh,
they should be ready.
I don't think we have so much time.
But 10 years, everything would have already happened by the time.
Yeah.
Whatever you mentioned.
Yeah. I think 10 years is even is too high. I expect something to start from 1.5 year. And by 2030, I expect half of the workforce in IT either to be cross-trained or will be replaced with some kind of automating tools, or either business will not be able to sustain themselves, because this is different than the previous IT revolution, right? Okay, so I think we covered this point. Second point I would like to go is Chinese economy. I have a belief, even we touched this point even last meeting in, I think, a very high level, that what could happen in future technology wise. So we know that after Trump comes into power, he's trying to even make some fundamental technological changes in US, because even he has a fear that if in the AI revolution and the AI enhancement world, if US do not make everything ready and faster than China, then there will be a moment when China will just going to make multifold change in technology, and then the AI will just take over all the things that US has done it, right? And they are expert on this topic. And we also discussed last week that China already have infrastructures. They already have everything what is needed. In India, if you see, if you like to make a company like OpenAI, you don't, because you neither have investors who would like to put money for 7 8 years and wanted to see if it grows. In India, people or the investor even like to have company where there will be a quick change in earning, like e-commerce businesses, like delivery app, where people are the major products. So but in AI at the moment, you have to put a lot of money, and then if technology get folded into a positive cycle, then only people can make money, or those investor can make money. So in China, there are people who already has put money into AI, into electric cars, into making manufacturing changes, like big capital of manufacturing hubs. And technology wise, they are pretty much in the right place. Maybe even in US, you have maybe only one or two major cities, but in China, they have a capability to make it more. So I have a belief that in the AI race, even though US can be a leader at the moment, but in future there's a possibility that China will going to overtake US. And I'm talking about a use case where in next 20 year, even though US will grow in the AI and technological fields, there will be more technologically enhanced company, but China will cope up. And if we have to discuss this topic, then I'm discussing it because Chinese economy at the moment is not so costly or expensive as US company. And what do I mean from it? If I would like to check SPX, and if it is my monthly chart, right, then you may be able to see that it is already on top. Everything is perfect, right? Even if you see Nasdaq, it is also in top. Everything is perfect. And even if you see DJI, it's on top. Everything is perfect. So even if you put money here, there's a almost no big change can happen where your money can get multifold profit. But in case of if you would like to see, like this is Chinese index, okay, this is also not a great performing chart in past, but if you see now, they are in right place. Plus the volume also has increased in few years, and they are into right place. So if the major money has to move now from US into a economy where the AI setup is ready, I don't think they can move to China alone. Okay, maybe they would have moved to Japan or to Taiwan, maybe some part of South Asia, India. But Chinese economy is the best product at the moment where the AI innovation can continue and lead. Example, Tesla, right? So we all know that Tesla is a global leader for electric cars, but there has been a competitor like BYD, and BYD actually has, I mean, as per people, I have not driven yet, but I heard that BYD makes better cars than Tesla. And that's all because they learned from what Tesla has done it. And now they're making things better, faster, and with the better cost effective products. So these kind of things can also happen in future. So if we would like to invest into global world, I believe that there should be few companies in Chinese economy which should also be in the radar. Okay, one of the company which I just talked about is BYD. So let's see if we have some charts. Yeah. Oh, board coming. Well, BYD Corporation is. Oh yeah, BYD Company Limited. It's listed on Hong Kong, I think. Yeah. So this is the BYD car company, right? And if you see here, I mean, just see this much, okay? So from 10, it went to 80, then it comes till 50, and then from 50, it went to 325. So these kind of companies chart, if you see, you may believe that, okay, there has been some growth behind it. Also, if you see the EPS is growing crazily, right? So these kind of company are the major beneficiary where there has been growth in past, and even in future, I believe that these kind of company can grow. Okay, I think same for Xiaomi. If I believe there's also, yeah, Xiaomi Corporation. Yeah, so Xiaomi is also coming with a car. You know that, right? They are coming with some $30,000 or $20,000 car. That's the projection. But even if you see the charts, it is crazy, right? So if we would like to be part of a journey where the big innovation is happening, then the best would be to look for those companies in China which are actually having good fundamentals and is able to grow their business. And I do believe these two companies are pretty good. There are more, but not every fundamental is fine. Okay, but these two company fundamentals is pretty fine. So it will be an challenge in future. I believe there will be a moment in future when these company will overtake a lot of worldwide companies. And I was not very optimistic before on these charts, but I do now have a belief that if US can grow, right, and if India's growth on technology is limited, which I believe that we do not have AI innovation or innovating company in general, then the only option that we have is China. And the only reason these companies are not growing is because they are not allowed to participate in global economy. You know what I'm saying? Like you cannot buy a BYD company in India, or maybe you can. I have seen some dealers in Bangalore, but it is not as easily available as Tata, right? So
Do you think cars is it?
yeah, in a car wise, yes, yeah, it is not
Cars already coming. BYD already coming in. Already came.
already came in Bangalore.
They are selling. Yeah, yeah, they are selling. So cars are looking good. BYD.
Okay. So for example, BYD in India, if I search something like this,
Three models already there.
okay, release date. I'm just trying to see. Um, yeah, there are three models. Okay, and if I would have to say sale, I'm just trying to understand because there would be some tariff maybe on top of it. Yeah, so it is not so much. I mean, 329 unit
Mm.
in 1 month is, um, I think it's almost
Started recently, right? So
maybe.
for import only started. Yeah.
Yeah, yeah.
Okay.
I have seen BYD car here in Europe, and they look good. And they are having more models than three, I think, in here. And there are possibilities in future that these company will grow more. Okay, that's one of the topic that I want to touch. That when we see global economy, I believe that there has been some race left for China, and if it get all the innovation in place in time, then maybe this company would be good enough and maybe good earning producing companies in future also. So never exclude this, because what I'm talking now is the IT is no longer same as making computer like Dell or Microsoft used to make it. It is more of IT services. Same with car. It is no longer like Ford or Mercedes, right? It is now technological car, AI cars, electric cars, right? Hybrid cars. So all the technological thing, if you see in the world, actually the leader is US, but the second leader or the faster and cheaper in future will be China. So in terms of money making, I don't want to ignore it. Yeah.
Mhm.
Third is crypto. So I'm not a fan of Trump, but as a person who would like to invest, I think his policy will going to make impact in the world. And company or the it's not company, but the crypto products that currently we have in the world, I think will have some good impact and positive impact. Um, like Bitcoin. So we already talked about it in past that Bitcoin is a digital gold as per I think crypto world, and there has been a limit of how much how much Bitcoin you can produce and can use. And I think what US are trying to do at the moment is they're trying to make crypto capital in US, and they are also trying to somehow map the major cryptocurrencies and securities into dollar. I mean, for example, right? Dollar is the base behind your power. So they would like to store all these major crypto which has value, and they would like to put it with dollar so that in future they will be able to use this cryptos, NFT tokens, etc. All those things, and will like to make an asset on top of it so that dollar will not get de-dollarized. Plus, they will also going to have a proper asset, a new digital asset with them. So I have a strong belief that what we see at the moment in the world will change in terms of digital assets. Um, and there's a scope of improvement. Like I discussed this last time, is that gold is about 18 trillion in the world, GDP wise, not GDP, like total market capitalization wise, and Bitcoin is around 2 trillion, right? So there is a possibility that if it has to be gold, then it has to grow by 9 times. And when a product like Bitcoin can grow 9 times, then the smaller um, crypto products can grow more than that. Only problem with cryptos are that when it will go up, we don't know. And if it falls down, it falls pretty sharp. So if you are using leverages or if you are getting inside in a wrong time, then it can also go against. But with the changes in the structural way of investment that I think US is going to make some more profitable and feasible policies for crypto world. I think this is the moment when it can go up. How much it can go up, I don't know, but it can go up. And with that, I think the product like Ethereum or Solana, right? XRP. I think those are a few of the things. Yeah, I think those are the few of the things which can get benefit out of it. I know in India, the investment in crypto is, I mean, people see it as a bit catchy, but I don't want it to rule this out because I believe that with the change in the new world structure, digital tokens and digital securities and digital payments will be the new normal. And once the mutual fund will start making more ETFs on cryptos, small cryptos assets, and once there will be some way to trade in between those cryptos, these companies will suit up, right? So, from my side, I believe and I have a strong faith that this is a good moment to do investment. And even if you see the charts itself says the same. For example, let's come back to BTC. So, example, let me make it bigger so that we can just make that one, right? So, we have been discussing this from past few, I think, weeks that if you make something like this, a Fibonacci series, then we get to know that yeah, any good chart which goes up do follow this trajectory, right? And now it is about 1.6, and I have a belief that it can go till 2.6 at least, which is about 150K, which is about 50% from here. 50, yeah, 50% from here. And if that happen, if Bitcoin can grow 50% from the current value, I have a strong belief that other crypto or strong crypto, not like any crypto, but strong cryptos will be two, three times, maybe five, 10 times. We never know. So I don't want to rule this out. And in the moment where companies in India do not have good earning cycle, I think the money will stay in US. So there's a possibility that all this money which we're talking about at the moment, as of today, will be made in US markets, not in Indian markets. Yeah. So this is my, I think, the total understanding and what I was trying to explain here is that there has been some changes happening in the world, and it is not a bad thing. I think. Bitcoin, are they using anywhere for the transactions of? Yeah. Tesla, they were accepting the. I think there is a country which actually make their currency against Bitcoin. Used currency against. Um, it's a small country. Okay. Which country use Bitcoin as currency? El Salvador. And I will tell you something, huh? I mean, you have to think in a different perspective. Trump become president. You know, okay, and Trump, as per report, have given call to few countries leader. Um, Trump called El Salvador, I think. I mean, you must know this that Trump has called only few countries. One is UAE, and the second, I think, is El Salvador. Okay, and the reason could be more than just crypto. I mean, there may be something more geopolitical which they would like to do it, but I cannot overrule this part that since El Salvador is trying to be on this digital asset way, they would, I mean, one of the leader, at least in this front, at least in this front. So I have a belief that Trump would still like to discuss more on top of it. So things are happening. It is not completely not in use. There has been, and Tesla has about 10,000 Bitcoin, I think, in their reserve. Oh, okay. Okay, bring down to 10,000. Yeah. So this is an old news, I think, but mostly even a big firm, they are trying to hold Bitcoin as part of their reserves. So they also do believe that these things will help. Yeah. And there are more things other than Bitcoin, because we have to, I mean, we can discuss all together, like what exactly the Bitcoin world look like. Is everything is just like Bitcoin, or there are more than that? I mean, what are the products in cryptos? I think I have some good understanding now, because I also was been reading from some time. But I have a belief that there are a lot many products other than Bitcoin, where some has been made for safe transactions, some has been made for cheaper transactions, some has been made for better security, right? Some are being made for better infrastructures, like an ecosystem where you can actually grow as a community and can make more product on top of it. There are been some coins which are working as part of platform, like Solana, right? So then there are meme coins, and I don't believe that all meme coins are wished. Okay, I think we are not able to understand what the meme coins are meant for. People are trying to make a very narrow judgment that these are just made for fun. You know that early 90s and 2000, the Yahoo chat or those chat messengers, they were being created as part of fun. But in future, most of the major companies like Facebook, they actually become great because of chat engines, right? Because of chat platforms. So the thing which look like created for fun sometimes become more important than those which are created for better purposes and serious purposes. So, if you heard Elon Musk in one of the, I think, celebration of Trump, is that he says that we will going to take Doge to the Mars. And before that, there was always a statement that Doge to the moon, but now he's taking Doge to the Mars. So I will not be surprised if tomorrow he is going to make a rocket mission, and there he will just going to put a sticker on top of the rocket which Doge dog, you know. So in the end, these things, these small things, group people together, or maybe they make a space station in Mars and will going to give a new name like Doge station or something. So these things matters, right? When we are talking about a economy or a digital world where things are not clear, I think meme coin also has a space. Maybe it is a bit early to judge where it will fit, but I believe that if you have a strong back, a strong institutional back, then these can also sustain. And this could be one of the reason also that Trump has introduced his meme coin just before his oath taking ceremony. So things are going in right direction in crypto world, and I believe that we need to have a good and positive eye into it. And if this thing start falling, it's fine. Okay, that is not something to like worry about. But if it goes up, we should never see it as a hated eye, like this are wasteful things, has no value inside. When market will fall down, Bitcoin will fall down. I think that period has gone. Now we have to see it as a new and different asset. And if you believe Bitcoin is a gold, digital gold, then when market falls, people do invest in gold. I mean, gold goes up. So if there's a global recession coming up, then I have a belief that if gold is going up, Bitcoin should also go up, because people will rush toward their investment and money, and they would like to put it into a safe place. So if it is really a gold, we'll get to know about it in 2 years. If Bitcoin will go up and the global economy, including Indian economy, goes down, then we can say that it is actually a gold, because in the bad time, people believe it is a good investment. Um,
Mhm.
I would like to also add, before we go to your power sector discussion, I would also like to open one chart, um, and maybe DJI is the one of the oldest charts available to us, right? Yeah, yeah. See, there has been one thing which I don't want to exclude in my analysis, which is the depression period, the Great Depression happening around 1930s, which we all know about it, I believe. But my major point here is that before this depression period, there has been a bull period also was there, you know, and maybe that moment the world was different, but nobody talks about it. Everybody talks that from 1930s to 1940s there's a period of Great Depression, right? And then there's a world war. Everything is fine, but nobody talks about something as an index goes from 100 to 360, which is like how much? 3.6 times, right? So this kind of thing can happen. So what I'm trying to discuss here is that because of AI, a lot of good company will going to increase their earning. The whole world, because of this cat race, will be trying to move to AI as faster than their competitors, and there will be growth. But very soon thereafter, um, uh, the world will have an also an major impact, and then there will be a slowdown. Now, whether today we are here or today we are here, we don't know. But I don't expect this kind of fall, obviously. But my point is that there will be a slowdown in future again after this AI hype will be over, right? Uh, so we have to be also a bit careful with the beer run that we're talking about from past 2 months, that it will start and it will stay for 3 years. We don't know. We don't know if it will be for 3 years or it will be for 10 years, because if there is a major global event happen in next 3 years, then the whole thing may get impacted. Or what about if I say a pinnacle of AI comes in 1 or 2 years, which is good enough for itself, and all IT companies would be able to say that okay, we are fine. All major customers will say okay, we can now completely rely on AI because it's so good. Or the Trump investment, Stargate, right? Those kind of things will add the speed of innovation, which at the moment maybe it is going by its own. If an government can support it more, maybe it can reaches to a place where it should reach in 5 years, it can reach in 2 years. So in all the context, what I'm talking about is we can either can go up faster from here, maybe, or either we can come faster down from here. And next 2 3 year is no more a global correction as per me. I believe because of AI and the other global changes, this will be much more faster and much more different than previous time, because I have a strong belief that the IT firms like consulting firm will no more be the safe assets for investors. And pharma, right? I mean, people do believe pharma and FMCGs are defensive sectors, but if you ask me, I don't believe that pharma would be defensive anymore. And the reason is that, I mean, why pharma is always a um, safe place to be in. Maybe I have pharma. Oh, where is pharma? Oh, yeah. For example, see, normally pharma is safe, but if pharma is already on top, I don't expect it to go more up. I mean, if world is falling down, if India's economy is falling down, pharma should not go up from here. That's impractical. And pharma has gone up from this place because of corona and other medical needs, right? So it also has to correct somehow. I don't expect it to grow up more or more rigorously from here. So pharma has to also correct. And FMCG is a problem. Okay, FMCG also I have. FMCG is a problem because if you see now, it is already starting correcting. But the problem with FMCG is that if people would not have enough money in their hand, right? Who is going to spend more money into FMCG products? I mean, I can have a toothpaste and I can use it for a month. But if I have more money, I can buy a premium toothpaste. You know what I'm saying? I would like to eat noodles, but if I have more money, I can buy more noodles, better cost noodles. Also, I can have noodles outside my home. But when people don't have money in their hand, maybe FMCG can just survive. People will decrease their spending, and the FMCG will survive, but it will not grow. So maybe it will survive at a place. It will not fall down like others, I believe, but it will not be a growing sector anymore on that front. It will be a little defensive. And FMCGs, at least I am a bit positive than pharma and IT because it already has corrected. So it means that if there's a fall coming up, then maybe it already has corrected. So it will try to sustain the indexes. So this could be fine. So the only place where I think it's going to help somehow is FMCG, but it will also not grow. It will just sustain itself. And the sectors like auto or PSU banks or PSE as indexes, I do believe that these things has to correct more correct than what is corrected, right? So there will be some chaos moment in these sectors, like even for realities, I believe so. So
Recession will make all the other sectors like
yeah,
reality and auto sector, it will get first hit.
first hit, exactly. That's what even I mean. And since US is yes, yes, and if the recession is just like 2008, then we should also understand what happened in 2008. In 2008, when the things went wrong, in total, US government, or you can say Fed in general, have pushed the money in the market, also in the market or is it capital industry, right? So those extra money pump the individual sectors, and also the global economy. So everything goes up. And soon after that, there was a slowdown between 2011 to 2015. You know that, right? So this is how it happened always. For example, okay, let's open SPX.
Yeah, that's why we started our career, right? 2011.
Yeah, yeah, that's also right. I'm just trying to find something. Um, how to say? Yeah, I think US market is a bit different in this context. I will come to Nifty only. See, um, 2008 something was wrong, so it has been pumped so that maybe I can make it bigger. So in 2008, the things were not right, so money has been pumped globally, and it goes up. But from there, right, there has been a slowdown for another 2 3 years. You see that? So this has happened mostly, and this is a period which no one talks about. And why I'm talking here is that for us, or for even now, this has already been done in 2020 when global, not recession, I will say, but global correction has happened around 2020. The money has been pumped across the world. So what actually happened in this case is that when the global economy get extra money, the companies will take the money in lower interest rates, and they will going to put that into their business, which will increase the growth engine. And then after some time, people start getting money, jobs, etc. So in the meantime, the all the problems that currently had happened in past will also get resolved in meantime. So thereafter, there always a slowdown. Okay, and that slowdown actually is natural because since the extra money has been pushed in the world, this actually has to digest in the global uh, timelines, and that's the reason this kind of slowdown happened. And it is known to the whole world that this will happen. So even for us, when the money has been pumped after Corona time, we all know that there has to be a slowdown. So interest rate goes up and other things happen. But actually, the slowdown are yet to reflect on the charts, on the major indices, right? If you see anything like global charts, I don't think after Corona this has been, I mean, a slowdown at any point. It is more like it is going up pretty easily. So the global slowdown has to happen. So why I'm talking about this is when the slowdown happen, or even this moment I'm expecting global slowdown, is because soon after this period things will go up. Like if you see here, right, the things will go up. And that moment we will enter. But if the AI and crypto or all these new things come into picture, maybe even in slowdown, things still will start moving up, right? So indices will go up. And if indices will go up in the whole period, this can make bubble, just like what it has made in 1930s. You know what I'm talking about? Is that things are bad, but still it goes up, and thereafter there was a moment when it broke down. So in I mean it is too early to judge, but maybe in next after 1930s there could be a moment when since things are not fundamentally right, and since the government cannot put more money into the market because they don't have any, plus since the global economy itself does not have growth, the things can go down, or maybe the AI hype will going to make people with less money, so the spending will decrease and the whole thing may come down for a moment. So this can happen. So I'm expecting something similar, to be very frank, but not in very near future. Maybe in far future, as I said, 1930. Sorry, so for us again could be 2030. And
After 100 years.
we can expect that to happen. But I'm bringing this topic today because it will be good to expect that what has happened in past we should take some learning out of it. Okay. And we are just not talking about any more wars. I mean, we're expecting for a better world. So if we are sitting on profit as of today in Indian market or anywhere else, there is no harm to book profit into some of the places. This is how I'm trying to correlate with IT. We all know TCS, Infi, Wipro are wealth generators in past. So somehow people do have money and make profit on those. There's no harm to come out of it, right? And if those company will go up in future, if we say that, oh, those IT things, IT innovations in AI actually help this company to get more jobs, more skilled employees, more earning in total, then we can onboard it again. That's all fine. But at least these things will help us to be prepared for the worst, and that is more important. Yeah.
Yeah.
For example, Trent. I have been a big fan of Trent, I would must say. And if you see the red uh, location symbol here, I actually have sold a lot of my share, even when it's going up. Not because I don't trust the company. Mostly it's because if global or Indian economy is going down, then these charts has to come down. There's no, I mean, it's a very unique case. Like out of 100, only one stock actually will keep going up if the trend is opposite. But I don't want to make myself ready in this case if I'm an early investor. I don't want to, I mean, wait for that to happen, you know? So I don't know how much it can fall, but as of today, if you see, right, it is falling down pretty much. It also has break a lot of major support. So it may take support and it can again go up, all fine. But why I want to ride this time? I mean, it's a choice for me. So if something similar is going to happen on IT shares, it's a choice that I would like to come out. Right? That's my point. I think I have shared all the points. Maybe you can discuss or share your thoughts on the power sector and let us know why you're so bullish on it.
No, don't. So lastly, we discussed, right? Example, this one, Imami Limited. I just went through the details on that.
Yeah,
Open the screen, that's no screen of that.
I
So
can.
Imami, like from 2020, right, in this bull phase, maybe whatever you can call,
Mm-hmm.
even it's not divided. That is one reason. I mean, and good screen.
Yeah.
In the screen, I so we have seen that the CPS is gradually increasing, right?
Yeah, actually, I do have this filter here in TradingView, right? So I would be
Correct.
able to also see that the EPS has been growing pretty good for this company. Yeah,
Sector wise. But I see what's tax percentage is decreased. Go to the screener.
let's see.
Is it because of that? Scroll down. Yeah, here. Scroll down, scroll down. Quarterly results. Here. From 2013, right? See, if you see from the last 2022, 21, 20%, the
Mm-hmm.
tax percentage and the net profit.
Mm-hmm.
So after that, it is minus 22%.
Yeah.
Suddenly, you see that EPS increases from 10 to 19,
Yeah.
19 to 14, 14 to 16, and the tax percentage is less.
Yeah.
So company may be doing the same thing as before, right? Like 2017, 18, 19, and 20.
Yeah.
But due to the tax percentage, change in the tax percentage, the EPS might have got increased.
Okay, so okay, but that is one way of saying that decrease in tax is increasing the earning, but you have to also see the sales. Since the company is increasing its sales in a pretty regular basis, that's also add up to the EPS or to the net revenue in the end. For example, it is yeah, so for example 2800 to 3100, so the sale itself has increased like 300 crores. So if the net profit increase also 300 crores after tax, it's okay, it's not completely different. And if you see here again 300 crores, but here the net profit is decreased. Now these are few of the things we have to see, like maybe the operating cost, or maybe we have to see what exactly happened. There would be something in between. uh See, expense also has increased, and um
And the expenses increase a
yeah,
lot.
yeah, I don't know exactly how this figure is coming, but maybe because of expense we have to see if also it has any exceptional expenses added.
No, the profit before tax, right? The profit before tax, they are putting 6% tax and they are minusing it.
Okay.
670 we have, right?
Yeah.
The gross profit is 670.
Yeah, see, material cost has increased. If you see, material cost was less in last 5 6 year, but now it has increased. So if material cost increase, the expense also goes up. If you see,
They're not so much, right? Material club,
yeah,
1 or 3%.
maybe, but if you compare with 2254 to 2550, it is increase of 300 crore. So the sale also increase, but that actually has been not shown in the profit because the expense increase in the same moment, right? um, and the tax, I don't know why this tax of 132, but here tax was applicable. So in the end, the net profit has gone down, because of which the EPS, which was 19, become 14. So this could be exceptional thing to say, but my whole point is that if a company is making increase in sales and it does not have a debt or a change in expenses drastically, and if it is making a good net profit, it is fine. And Imami is a FMCG company, if I remember. So
FMCG and healthcare.
healthcare also, yeah. So Imami is one of those slow growing companies where you may put your money. And if you like to more, I think we discussed this, that we can read the notes of Concall, which is AI generated. So even you have AI here. So these
Now come
things,
to the graph. See the graph.
graph in a sense, this one.
Now in the Google direct graph, yeah, max.
Oh yeah.
Maybe here I Google is easier for me. Total.
Yeah. What exactly you want?
In the Google.
Okay, let's.
No, I'm trying to tell that it doesn't meet our criteria for to be in the 20 stocks. That's what my yeah. Here go to max of 5 years. Yeah, see it hardly. give 60% return, and see the chart is also not so much,
Not great.
it's not the peak, it's not in the, so
Yeah.
out of 20, right? So I will try to see there are many things, right? One is FMCG and healthcare sector. There is high competition, huge competition.
Yes.
And we are talking about FMCG when there is a bear run,
Yeah.
and in order to bounce it back for this company, it will be really difficult sometimes.
Yeah. Yeah. And cost sensitive market.
Cost sensitive. I'm not telling that it's a bad company, but
Yeah. If you remember the filters that we have discussed previously does not really allow Imami to be in that because we have to stick with growth economy, right? A growth sector. I don't believe this is a growth sector. This is a defensive sector.
So yeah, is good for long term, but not for this fitting to
No, no,
for this.
no, no. I mean, okay, if I were you and if I would be analyzing this company, there would be something which I would like to first put it as filters. First, why I'm looking for Imami? Did I already check all the other competitors which are bigger than this? So I would first go and I would see the peers and I would see that okay, Imami is not the greatest, but this is also something not the right way. I would click on FMCG and then I will search for Imami and then I will get to know that in FMCG in India, Imami comes somewhere in 10th place. Then I would say, okay, did I really analyze the other nine? If yes, I mean, fundamentally, if I'm talking, if yes, then maybe I can say, okay, I didn't find the best value, so Imami is best out of it. Okay, that is one way. But if we have not done it, then just to discuss Imami will not add value because it is always comparative. You know what I'm saying? Second is sector itself. If the sector itself is going down like this, right? So Imami will also be impacted. So we should not see the chart only with the view like Imam is going down. It's also because the whole sector is going down. If I will also open HUL, Hindustan Unilever, then I would see maybe something similar happening also there, even though it is the industry leader. So we can really say that Imami is performing good or bad. We have to see a comparative check when we do so. And thereafter we have to see the company's management. Maybe we would like to see how much debt it has. We would like to see growth prospect of it. I don't believe, and you might also need to see the products which are high selling products. Like every company has a catalog of products which are either high or bad, higher selling thing. Do you think those will be in demand in future? They will be. I mean, why the company will make more money? Just think about it. If company EPS is about 18 today, why it will be 21? Either you make a better product or your product price will increase. So FMCG is a uh, cost protective industry, I would say, where if you cannot increase the price drastically, you can only increase the price if your product is in demand or you want to handle inflation, right? So you would say my product costs 10 rupees, now it will cost 12 rupees because of inflation. So that is acceptable, but I cannot make 10 to 20 rupees. That's not acceptable. So it's a price sensitive market. And I, in my 20 list, will never like to have an FMCG because I think it is already a mature industry, no growth left. And if there's growth left, I would like to check other charts. So, as I said, I think I checked Dabur and Varun Beverages in past. So, Varun Beverage, I think I'm a big fan in past. And even if you see, right, this is a chart which you will also would like to participate. I mean, not now, but I'm saying that it is also FMCG chart. So then we have to say, okay, what was good in FMCG? Why Varun was going up and not others? So then we will find the delta or the X reason why it was going up. Like I think they are the official supplier for Pepsi in India. VBL Pepsi. I'm just trying to remember what was the reason. Yeah. So if I go to Warren Beverages, see, oh, sorry, PepsiCo bottler of the year. I mean, my point is they are associated with a brand which is growing. So this is fine. And I think VBL also got license in between. to sell Pepsi product in outside India. So that's a big news. So there's a reason behind other than just FMCG product. So if I have actually done those analysis for other company, then I'm fine, right? So I will suggest let's not go in FMCG sector at all. These are defensive sectors. There are Yeah. many more products where this we can have better things. And
Then that's what let's try to eliminate. I mean, things
yes,
at least. So FMCG, let's move away from the FMCG now.
yeah,
Let's for that.
for sure. Okay.
And also insurance.
Hmm.
Let's spend some 5 to 10 minutes on the insurance sector.
So
So
yeah,
HDFC Life.
HDFC Life. Okay. I would also like to open the same in screener. So
So long term, but for short term, somewhere I see that insurance um, business as a whole
yeah,
not
yeah,
in the
true.
short duration because of the I mean current thing. Many of the folk right, where I had a discussion, they're still seeing insurance as a investment, not like actual insurance.
Mm-hmm.
Yeah, still we are seeing as a investment product. So
Yeah,
insurance penetration is very less when you
yeah,
compare to other countries.
yeah. No, I completely agree with you.
Uh,
I would like to ask you a question, okay, since you raised this point.
Mhm. Mhm.
In insurance, leader-wise, HDFC is the largest in private sector, and above it is SBI
No,
in
this
private.
is okay.
In private, yeah. And LIC is much bigger, of course. But my point is, ROE for LIC is 60 plus, and I can see the same that even earning is in 60s and ROE. Okay, it is ROE percentage on my screen, but if you see EPS, it is 60s, which is fine. And okay, so if I compare ROE percent, which says that is the company is actually making money, it says that out of everything, LIC actually make the biggest money, growth wise. But PE wise, it is the cheapest, you know. My point is why market is not giving right valuation to LIC, even though the earning is highest in the whole sector. Why
Mm.
I would go with SDFC with 76 PE where my ROE is about 10, you know, plus growth percentage is fine. But if I have to compare the growth, why not ICC Lombard, which has better growth and better ROE? Or, yeah, I mean, something similar. I wanted to raise a point why we would like to go with only HDFC Insurance because it is the leader as private insurance company, or we really have understood the reason of being staying with it. I mean, if you ask me on a very high level, I believe that maybe LIC had its own problem, but if you ask me, SBI Life and SDFC both look similar to me. I mean, even PE is
Mm.
comparatively, even SBI is cheaper. Market cap is almost equivalent. SBI even have no debt, and if I go right, um, yeah, there are cash flows also, which is more in SBI. Um, and promoters holding also looks better in SBI than SDFC. Only thing is the quarter sales percentage, which mean that if we go and look here, the company is unable to make money. You see here, 28,000 to 17,000. So the wait, 35% sales quarter difference is coming. So when you do not make money as sales, the stock will go down, irrespective. if it is SDFC or SPI or whatever, which mean that the whole industry, and we have to see the packages what SDFC, LIC sells. But I have a belief that this industry is unable to make sales in recent past one quarter, because of which it has been punished. Also in SDFC,
compared to previous quarters, all the companies.
yes, there's a possibility that
Yeah, okay, December 2024 only released, no? January, now, last week.
maybe I was not following this.
See, the minus 32,419
Mm-hmm.
profit before tax.
Yeah. No, no. Always say net profit. Huh? Never see this. This is of no value for us. So always see this one if you want to. So even if, okay, so even if you see, right, 2021 it was making 275, then it increases, then it decreases, and then it is keeping itself between 360, 316, 417, 479, 421. So it is like a pendulum revolving around this level. So at least the earning is not increasing. And as I always says, stocks are slavers. Stocks do slavery of earning. If you cannot make money, everything will stay on its place, or even it will fall down. Whatever the brand name you carry it with, okay. And even today, if you ask me, I believe that if companies are not making money, then also it actually demands the higher P, which means that it is still costly, right? So people do trust it that it will go up even more than SBI or maybe other competitors, and it is one of the largest. But still, this company is not making money. So until the charts make money, I would not like to onboard on it. You know what I'm saying? So, for example, if you see this peg ratio, remember we have added this last week, sorry. We said that if the peg ratio is red, then this means that the company is not actually making money. Okay. So until it is not really green, I would like to avoid it. And I would like to see if SBI Life has similar thing. Yeah, similar, right? Similar. How about VBL? Let's see only peg for these players. So if you see here also, right? VBL was making money until a point, but thereafter it started also making not so money. And even peg actually tell us the valuation wise. It says that you're not making money, but you're still going up. So it has high valuation now, and it may correct. There's no guarantee, but it may correct. So until uh, I would not get an earning prospect in SDFC Life. At least I would not like to put it into the 10 or 20 stock that we're talking about. At least today.
Yeah. Yes, same opinion. So
Yeah.
insurance stocks,
Yes.
smart for insurance stocks. Yeah.
At least now, maybe we have to follow the
Yeah.
earnings, and
Yeah.
we'll get to know if the earning will improve. So just think like this: why insurance earning will improve? If you have less money, will you buy a insurance, or if you have more money then you will buy an insurance? I mean, if you already have an insurance, I'm asking that way. When you will increase your insurance coverage? When you have more money or less money, because you have to pay more premium.
Good. We will not increase, right? Consider you have taken a term insurance.
Yeah.
Increase the premium. So it's in
Yeah.
across the.
Yeah, okay. So that is one way, but you might have made a premium of 50 lakh 10 years ago. Now you think 50 lakh premium is nothing as term insurance, and you would like to make it 2 crores. So you would, I mean, I don't know if you can increase that previous coverage, but you have to take a new insurance. But if you're not making money, or if you itself is struggling with money, you will not opt for that service. That is existing customer. New customer,
Correct.
I believe that all the IT employees or all the people who have awareness about financial world or health world, at least after Corona time, do already either part of insurance, or either they get insurance from company somehow. So awareness wise, I think there was a gap previously before Corona, but now awareness wise, it is no longer a barrier. So only those people who are getting into jobs, they may get a new health insurance or may try to get a term insurance, all those things. But all those people who are already part of financial world, more or less, they will try to upgrade themselves or change the insurance. For example, somebody would like to go with a pregnancy insurance. Somebody would like to go with a diabetes insurance. Somebody would like to go with some special hospitalization for parents, So all those are top up to me. And this industry will grow for sure. There's no doubt about it. But is it a growth industry with the current timelines and the current world? Maybe we need this, but maybe not everyone will rush toward it. When people will rush toward insurance companies, if you're talking about only healthcare and term insurance, when people will rush, when people will like to go to hospital and like to save their money. So that's more like Corona period, where people are rushing to hospital. Yeah. And that moment these companies are in demand. So maybe we can find a number like how many people in India are insured, and we may say maybe 10% people are having healthcare insurances, and maybe that number will grow 40% in future. Let's find it out. I don't even know how many people percentage and that is also a problem are having the scenario when you said, right? Corona time and all. So insurance companies have to pay, yeah, the money from their phone. Yeah, true. So they got losses at that time. So if there is a time again, the insurance companies will to pick up the profits will take a time again in that scenarios. Yeah, true. And we believe that the business of healthcare industries works with this assumption that people will not come up in large scale. They will just keep paying the premium, just like house premium. But so in India, about 5.5 crore people do have health insurances, and I do believe this also include corporate insurances, right? So there's a possibility in future that out of example 150 crore people, there would be at least 25 to 40 crore people who would like to have health insurances if India is becoming better. So in that case, the industry itself can grow by maybe 6 to 10 times, which is good. So that's why people are always saying that actually the health insurance will grow, and in that case, these company which are the leader of insurance companies will have major part and major growth, right? So until if we say about that, like how long it will take, maybe it's a 20-year journey from today. In 20 years, yes, industry can grow 10 times, and in that case SDFC can also grow 10 times. So that's a pretty fantastic things to say, but it cannot be part of our growth story. So it is, yeah, it is good to be aware of it. Maybe definitely we will come back on this one. Yes. Maybe in 2023 or 40. Whenever this, yes, company making profits, whenever this company make profit, there may be a awareness which is missing at the current world, because of which people are not, maybe there's a habit in future where people will like to say, if I'm getting salary, I must have health insurance. If those kind of awareness also go up to, yeah, so many people, my friends, right, when I say that go to term insurance, they will ask for the um, plan, and they say they ask for how much returns they will get. They, nice. So that, yeah, people should come out of that mentality. Yeah. It is also awareness about how the product itself. People may go into endorsement plans where they would get some returns as part of insurance. So insurance product with investment is not bad, but it is not either good. The purpose is different. So people, if you ask somebody who is already 35-year-old or 40-year-old, if you like them to have a term insurance, the premium itself will be very high. So they will say like, let me avoid this, my company is already paying for it, so I would not like to have it. Or if there's a housewife who is not earning, then they will say, why do we need a term insurance for my wife, or for a dependent person, because they are not earning. So people mostly think that term insurance is only needed for those who are making livelihood in a family. Plus it should cost penny, it should not cost more. If you have to pay 4,000 per month to term insurance for 1 crore, then it is not so great for a person of a normal family, right? So term insurance has its own challenges. With awareness, this will grow. But you have to also understand that these things come with its own complications. Like, what is the so there's something called settlement rate in insurance industry, which mean that if somebody goes for an insurance to these companies, right? Do they really reimburse it? Yeah, do they really reimburse it, or how it works? So that's why people like to go with SBI or LICI, because there at least you have good settlement ratios like 98%, something like that. But in private bank or private company, they may play along because they're not liable or not. I mean, term insurance maybe is for 30, 40 years, right? How would you know if HDFC life exists after 30 years? May not be, right? So all these things are important. Maybe these stocks are something to play for short term swing, where you see that okay, the valuation is pretty good, earning is also going up. Like if you see now, if you ask me, I can say that it has been consolidating from past 4 years. It's a good level. It's also making good amount of EPS. So I'm perfectly fine if you wanted to put money here, but it is not part of the growth. When it will part of the growth, when something fundamental will happen. Okay. And if the chart crosses 760 or 800, then I will be interested to know more about it. Like, okay, EPS is going up, PE is going up, RO is going up, insurance sale is going up. There must be something good. And that moment, maybe we can revisit or we can think about investment. At the moment, I think they are struggling. And in bear market, I don't think insurance will be a good bet.
Yeah.
Yeah. Okay. Would you like to go to power or we can discuss like this?
See, power I didn't much today only you gave that agenda, right? So I didn't gone through that. These things I this week when I got a time, I just gone through that.
Okay. For example, you touch upon a point like smart meter, India, NSC. Hmm.
Tila and Asopal, they came up with a report that there is a 40 trillion opportunity for the power sector in India. No, they just submitted the report, not the stock. So
Yeah.
the report. So in all the areas,
Yeah.
starting from we are moving toward the renewable energy, right? With
Yeah.
the aim of 500 gigawatts by 2030.
Yeah.
So in 40 trillion investment comes in
Yeah.
all the area, all the three stream, downstream, midstream, right?
Mm-hmm.
Maybe that is only in the oil. Here we call it as a generation, distribution, and the transmission.
Mm-hmm.
Three things.
Okay. And did you have list of companies with each type of business or?
No, no, no. I gone through. I came across the electrical equipments. Okay, somehow
Hmm.
I have seen this interesting. Maybe you already gone through Siemens,
Mhm.
Siemens, ABB, and Hitachi Energy. I
Yeah.
find it very interesting.
Yeah. I,
All these three
I have
companies.
seen that, I think, but my point is, these are already high. I mean, for example, Siemens, right? Siemens is fine.
Mm.
Hitachi is Power India, right? Hitachi, Power India.
Power India,
So
correct.
Power India is also high, and this is part of my analysis actually. I was
Okay.
reading this. I think I already have some notes for myself. And you say ABB. I think that's also somewhere
Yeah.
was part of my list. Yeah. So my point is that yes, these companies are good, and it should be in the list. I do believe the same because this has been a wealth generator even from past, and even to me it look like the same. But I think we need to go more deep dive into it. For example, if I say ABP India, what exactly company do I don't really know. It's capital equipment, capital good electrical equipment companies. But what exactly it do? Is it something?
Business, I think only this one transformers. They will be.
Yeah, but I think we need to get more insight before we get
Okay.
into a. Yeah, I think there are few topics, or maybe, oh, sorry, what I did. Maybe I was trying to say that we need to come up to this list again, the stock check document we had made, and we need to see where it fits in. I mean, maybe there's a way we can identify what is the need for these kind of company and what growth story this has, because I have been hearing about the name like Apar Industries. I mean, yeah, this is not new to me as a name, and I mean, you know about Apar Industry, right? It has been one of the success story
Uh,
in the world. See, I mean, anybody from about 1,000 to 11, 12,000 is itself a growth story. So, if you say that these company will go up more than what it is today, which means that the P itself is all-time high and it will keep going up. Maybe you are right. I'm not saying this is a bad way to say, but my point is whatever the projected EPS growth was there from 40 to 210, which is 40, right? 30 to 210, which is seven times. The same has been also been visible on the price. You know what I'm saying? So the P also has increased with the earning and the price. So it is already in a right place. It is not undervalued, or it is not. Maybe it will grow from. I mean, just think this way: from 220, next time it will become 250, which is another 10-15%. If it becomes 10-15%, the price of the stock from 9,000 will also become another 10-15%, which is another 1,200, 12,000. So,
Many times from last 5 years. Okay.
this is what I mean to say. I can give you an example where earning has increased but price has not, you know. And if I say earning has increased and price has not, there I'm more interested. Kotek. I think I have keep opening this chart every week now. My point is why I would not put money into this kind of stock where the EPS has been growing. I mean, let's take an example where the price stopped growing. So the price stopped growing from 2020, 2021. Yeah, we can say about this period. So from 2021 Jan itself, the price has not grown. And the EPS has grown from 45 to 110, which is about three times, right? About. So price has not grown three times. Normally, if there is no change in PE, then the price should be three times in this use case. And if PE also increases, like the PE was 40, it becomes 60, then it should be even five times to six times. But in this case, PE also fallen down. 2021, the PE was 43, now it is 16, about 10. So it is a jackpot. The PE has decreased for a good fundamental company where price has not increased. So what are we expecting? I mean, what a company can do, tell me. I mean, a company which is keep making money, if it is not growing up, then that means that the market think it is not going to make money in future. But if this kind of company will keep performing in recession time, which is next 1 to 3 years, then market will going to see this as a good bet. You know why? Because it has a cushion. It has a cushion of previous earning where the prices have not fallen down. So they will believe that this cannot fall down more, because if it falls down from here and EPS is keep going up, then PE will be from 16 to how much? It will fall down to how much more? 10. So this kind of thing doesn't happen. Okay, what I'm trying to say here is that we have to see historical PE. So for example, I make this chart as weekly. Okay, and now I say this. See, this is the weekly chart of a PE of Kotak Bank. Okay, so there has been a moment of I think 2008. So leave that part. From that moment, 2011, it was 17. Right now, again, the valuation wise, we are at the same level. I mean, it is something where 2011 the price was 190. Now it is 1900. So it is, I mean, if I also come here, I think maybe I will be able to. find the earning of that moment. Don't know, but year was 2013. So 2013, the company was selling 10,000 crore. Okay, companies was revenue was 10,000 crore. Now it is about 60,000 crore, right? So a company which has grown its revenue itself by 10 times, I cannot believe that that company PE is so less. It's not justified. So what I'm expecting here is that if government come up with a policy in next 1 to 3 year which will help banks, then this kind of stock will become at least 2 to 3 times from here. That's my simple understanding. And the same is for HDFC Bank. Nothing different. I mean, if you see here, HDFC Bank, the earnings are perfect. Okay, let me make daily chart. It's better. So earning is perfect, PE is going down. So what is wrong? Maybe the global economy or the Indian economy is not growing. So there has been some fear, or maybe the FIs are running out. So there has been some fear that this company will not perform. So this is at a good level. So if we start putting the money into these kind of charts where the earning is there, but the price is not reflecting that, that means someday or the other this will go up. And I would like to be part of those businesses more than where the earning is also high, prices are also high. So you cannot make money there, because even if it goes up, price will go by 10-20%. But here, if the earning will be like 10-15% more than what it is today, then it will be 2x, right?
Mhm.
So this is where what I'm thinking, and this is a better and safer approach, I believe, because we are just our base, the first base itself is earning. So that is much safer for me, if you ask. And I don't. ICICI is exception, huh? I will tell you. See, earning has gone up consistently. If you say in 2020, 21, it was 20, now it becomes 70. So earning is much more better than competitors, faster, and the prices are also been rewarded in the same way. Still, the PE has not increased. So my point is that this is exception in terms of chart. Ideally, if
The whole.
yeah, if the PE of 18 become, I mean, if we go in past, right? What is the average PE for this stock? So I would say, other than 2018, or maybe this is some data issue, but the average PE would be somewhere, or the good PE for this would be somewhere, the highest was 27, 28. So even today, 17 PE. So to go to 77, it is how much? About 50% from here. So to increase the PE, maybe I can use that here also. Oh, good enough. So 70% increase in PE, or the 70% increase in price will make the PE as 30. So the stock itself can grow 70% from here. And then also I will say that, oh, it has just become what it was cost as costly. So if it become, okay, today it is 1,200. If it become 2,000, then I will say, okay, the PE is now costly. Now the company looks costly. But in the same time, if EPS increases, then the PE will not grow so much. So this kind of companies are jackpot, if you ask me. And at the moment when these are even falling, that is, I mean, that there can be nothing better than this. So if we are betting on banking sectors where the growth is there, maybe there are something which I'm missing, maybe. Um, but still, if we wanted to say in next 5 year, then and if your plan is to make 3x of your money, I think we can choose few of these companies and we can actually add these into our list. And there's a theory in the world that those in the beer will fall less, will also go higher than those who fall more. What I mean is that if ICICI will correct only 10%, and if SDFC or Kotak will correct 20%, it means that ICICI will start early, right? Because all will start together time wise. So the moment it start, it fall less, so it will go also above than others, because others are already lagged. So the chances of making more percentage wise earning is more on those stocks which fall less in a same sector. That's what I mean to say. So my point is that banking is something where we should bet on. And yeah, that's what I wanted to say, at least on terms of what we are discussing, right? Power generation, and all. Because I have a feeling that most of the power company, right? I mean, mm, capital good, right? Like cement, which we have just seen, right? I think we've seen the chart already. Um, these companies, okay, now it is falling. That is fine. But also the appreciation also has happened. So whatever money they have made it, I mean, how much money they have made it? Just see this: 24 become 80, 4 times, about 3 to 4 times, right? But the price was 2000 to become 6000. So appreciation has already been made. So whatever they make it, it's already reflected on the price. So now if the earning become 80 to 240, then only I will expect that to happen. But in the case of bank, they don't even need to make that exceptional returns. They need to just sustain what they're doing. And that itself is good enough for them, right? So even if we have to invest in Siemens, I will say that now it is at a good valuation, about 80, which is an average of its general valuation. So the hype of it has come down, and now it is a good valuation. And nowadays I also put the Fibonacci on PE. I mean, that's maybe new for you. I started putting this here. So I can say the PE has been from 60 to 120, and now it has corrected, which is 78% or 61 to 78% between. So it is a very good valuation correction, if I would have to say this way. So now Siemens is good if you wanted to invest. But now what I'm more interested is the earning is also going up. Valuation is fine. It says it is fine. But is the company going to make money from here on? Because if I see from here, it looked like it already been stretched in past because of its past performance. And the weekly chart, if you see, the 200 EMA is bit far, right? So if a company is 5,800 price per stock, if it fall even to the weekly 200 EMA, it is another 30% from here. So 30% fall is possible if it doesn't go up. And normally, if you see this chart, triple top, right? We discussed this in past. That and whenever I see this, I would like to have it in my note so that and I just say good, correct. I mean, I would like to have these comments on my notes so that I can cross check myself, whether I was able to predict when that was happening. So I have a belief that this triple top is too bad. Too bad means too bad. Now, it should come till 4,000. I believe. I strongly believe that. And the only way it will not happen if the earning, which is 80, become 100 or 120. So, how to know that? We can just say Siemens India Q3 EPS growth 2024. Um, Not India, India. I mean India. Maybe I can come from here. So normally company do give the projection in December, and if you come down, oh sorry, if you say EPS, okay, what the company guidelines are. So company is saying demand for energy transition is booming. Okay, mobility, energy, new order grew by 13%. So these are symbols with revenue up by 15%. So companies expecting its revenue to increase by 15%, right? Which increase the EBITDA to 13.7. Okay. And cash, okay. And Q4, new orders are 21%. So it is saying projected wise, because this is Q3, now they are projecting for Q4, that EBITDA or the order itself will grow, right? In that case, we can expect that the EPS, which is about 80, will be 100. So that can help the stock to go rise up. So that's a possibility. But if company misses out on the targets, then it will come down. So that's how I see technical, fundamental and technical together. That if company what is projecting, if it also come in the month of March, And if that moment, if the stock is also accumulating in the same time, then maybe it can go up because it shows the growth opportunity. And if during the same moment it comes till 4,000, then it's a very, very good option in the top 20 for us, because the PE will be less, the price is corrected, the growth is still intact. So it is great, right? That's how I think we should bid for. So we have to find those stocks which are cheaper, having more growth opportunities, plus we are getting into a right time, so that we don't get into a stock when it is already up, but we get into it. So one of the way you can do it is you can go to Jirodha. You use Jirodha, right? So you can go to Jirodha and you can make an alert on Siemens and say that whenever it is 5,000, give me an alert. You don't have to follow it every day, and whenever that happen, you can just make a name of the alert. It's like um, uh, I have to look into this chart because it is now at the level I'm interested to, and then we can follow up this topic again. That's how I see these topics. Yeah, same for ABB, I believe. Nothing different, I think so. Yeah, nothing different. But I must say that these companies PE is reasonably better than what it was. And Hitachi is, I mean, I have been study Power India for past few years, and I have a strong belief that, I mean, I also entered somewhere at 4,000, and I think I'm still riding it. But my point is that I believe strongly that these kind of companies will grow only if they have a strong partnership in India. You know what I'm saying? These are infrastructure companies. They need to make power stations. They need to provide a lot of solutions in the real physical ground. And if a major player like Reliance or Tata comes in between, then it is tough for them to grow exponentially. So maybe the best question is Hitachi Energy with, I'm just giving an plain thing. So, because see, you want to make a electric power station, right? Now, if you wanted to make it with some close name, then only you will survive. So it look like they have something. Okay. So Hitachi is to boot Tata Steel operations. So I mean, see this one. I mean, these are important success thing. This they itself have shared it together that these have some cooperation with bigger players. So this make more important, right? This is something which make more better stories for future. So I would like to stick to these stories. But even if you see here, this is making cup. This is making, I think, solder pattern or something. I'm just forgetting the name. This is solder pattern, right? Solder. Yeah, head and shoulder pattern. Yeah, actually, I will tell you. Yeah, head and shoulder actually. Sorry, my bad. Head and shoulder pattern. I will tell you why I'm talking about this. Actually, head and shoulder, right? It's like this, okay? But it is also going up in a manner. So if you see here, I mean, if you see just this part, this much part, it is kind of head and shoulder. That's kind of, yeah. And I have seen in past, whenever this pattern happened, the stocks is goes in the opposite direction most of the time. So it's a reversal pattern, I would say, something like this. And more or less, this thing is, yeah, there are a lot of example. And inverse head and shoulder is also the same. So these are reversal patterns, I would say. And yeah, we have to give all these things together. Okay, this can't be one single study. We have to say, okay, we are able to see that the growth is increasing, but it is making head and shoulder pattern. So there's a chance that it can go down. How much can go down? And even if you see, right, I also have a comment that it should slow down, because I think I have seen at some point, and I believe that it is already a bit high. And if there's a bear market, then this is the best opportunity for this kind of stock to come down. And there's opportunity, just like Siemens, it can also correct 30-40%. So will it correct this much? I don't know. But there's a possibility in the chart which says that is happening. Plus, yeah, these are news which actually give us more insight for short term. But it looked to me that we need to deep dive more into these sectors. We need more input. We can't really decide the future prospect without going deep dive. But chart wise, I think these are going down. And I would not put my first investment, if assume it is part of our top 20, I would not put my first 20-25% now. I would like to either start correcting, or I will say, okay, this structure was head and shoulder, but the stock actually goes up, and then it becomes double top and then it crosses up. If that happen, then I would like to participate, but not now. That's what I believe. And if you remember, we also make a list of, I mean, I think I was trying to make some list of stocks previously also. Um, yeah, I was just trying to get all this. It's also includes HDFC Life. Did you look into this list already?
I think you picked Imami from this list, right? I think.
Yes,
No?
yes. DMart is also. These are all use case study which I have added, like Lupin, because I have been. I mean, Lupin was one of the study that I think I have done in past, where I mean, if you see the cycle of Lupin, you will understand. I think we discussed this also last time. That if you see, right, this is making an inverse head and shoulder. If you see this, if I make the chart opposite, see, this is head and shoulder. Yeah, not exactly, but I would not say, but this is double top, right? And that's going down because I inverted the chart now. Okay, so what you're seeing is opposite of what happened. This is a way in trading view to do it. Alt I. So now I'm just making it opposite just for review purpose. It's make it look like it make double top and then it goes down. And if I reverse it make double bottom and it goes up. So I identified this stock in the moment when it was making double bottom. In the same moment, I do also find that this company was actually making growth on the EPS and on the ROE, and the debt was also going down. So that says that the company was actually having some fundamentally good things happening around, and the operating margins are also going up. So this was a good buy. And I would like to stick to this kind of company. Even now, also, if you see, it is up, but this is been on this price in past 10 years, right? So if you see company wise, I mean, just open it, Lupin. So Lupin is at the price where it was 10 years ago. And if you see the sales, okay, sales, it was making 9,000, 2012, 12,000. Now it is making 21,000. So double, at least double. So with the sale of double, where the profit is, yeah, profit is same. Such a thing. Okay, so that's why the profit is same what they are making 10 years ago, and in between they have an exceptional cycle where they are actually started making loss. That's why the prices actually has been moved like this. So fundamentally, this stock, if it has to perform up, then they have to increase their earning from here on. So the moment when I was able to find it, when it was making double bottom, that moment I think the company was having some loss. The moment was 2022, and 2022 they are making exceptional losses if you see. Yeah, so these are few of the period when we should get into a stock, not here, you know. So if we say that a company is making good money like this is an exceptional chart, okay, it may double top, but then something bad happened and I don't know what happened, but something bad happened. And when these kind of chart make double bottom or triple bottom and then it goes up, there's a more chances that these kind of good company can make or give more money. And you may see I also actually have come out of it because um, I don't want to put my money on risk just because I was right at some point of time, right? Because if earning is not increasing, then it is of no use. So what I mean to say is that these each of these company are for use case study purpose. And oh, see, I also added your favorite Imami here because I think it was interesting. Also for Adani Enterprises, see, I have added something called Best Buy. I don't know why. Let's see why I thought that way that moment. Hmm. So, see here. Can you see my chart? You there? Yeah, okay, great. So in this case, the company has continuously giving EPS, but Adani Enterprises has not performed. And now it is kind of making a pattern where it's not double bottom, but it's a higher bottom. So, and plus it is also nearest 200 EMA in weekly charts. So if it goes up from here and the earning is keep going up and the PE is, if you see the PE, historical PE was pretty high because they were not making money. But then now PE is around 50. So even if the PE is around 100, 200, it means that there's a 4 times increase in the price in the same EPS. So these kind of company can give multifold returns. Okay, that's what I wanted to say. That EPS is going up, prices are not going up, and as per I understood, geopolitical wise, Adani should have good time now, right? I mean, at the moment, I believe they have passed that bad phase of all the things that has been happening with them. So it could be good that, if you ask me. And Adani structure is such a way is that even if market is going down, maybe they are going to make the businesses in India and outside of India. So maybe they are not selling something directly to the end customer like B2C, but they are making something for the government. They're making something for the foreign places, and maybe they are making money, right? So if you come here and say Adani Enterprises major business, so they are into edible oil and staple food, airport operations, solar PV manufacturing, road infrastructure, water infrastructure, data centers, agri output storage, defense, aerospace, bunkering, shipping, rail, metro. So this is too good, na? Too good to say that these will be in focus for India.
They are coming out of this one edible oils and staple foods.
Oh, nice.
Dani,
Yeah.
Wilmar, they are coming out of the Wilmar now.
But Wilmar itself is a different stock. So, see,
No, no, FMCG, Adani Wilmar, they joint have 50-51%. Now Adani is totally coming out of the Wilmar.
okay, nice. Could be. Yeah, I'm not really so
Yeah.
great with running businesses. But if because what I'm more interested is the percentage of businesses, right? Where they say how much of the business is coming from each of the entity. But okay, there must be a way to find it out. Adani business, how to say, other
No,
enterprises.
screener, check in screener, no, they will have that.
They will business
Screener,
split.
Adani.
Say business. What should I search? Business details. Um. Okay. Screener. Let's see. The prices. Um. So normally, if you go here and if you click on sales, I mean the easiest way is to go to the balance sheet. I mean, you go to the PPT and there they explain everything. So if I come here, they would this PPT is good enough. Total income EBITDA. There's a portion where they say how much money they make from each of the type of business. Normally they give. Um, See this one. This is the type of business: ports, logistics, renewables, energy, and gas, and how much growth they actually have seen. Um, okay, development operations. Okay, Adani Enterprise Limited. These are the major business structures. I was expecting a chart which gave me better outlook. Yeah, it is not across, right? It's not together, it is individual. Okay, let's see if they have provided anything specific. Operational, okay. Financial highlight, uh, sentiment wise, growth wise, statement. Okay. Yeah, I think uh, yeah. Segment. Oh, this is debt. Okay. Highlight, mining services, ratings. Thank you. Okay. Too soon. Um, no, I think the word I got it. It is segment. So business segment, and then images. Um, yeah. See this one. IRM. Okay. I'm not pretty sure. Is it latest? It's not. But what I'm seeing is that IRM, airport and mining look the major one. So what is IRM? IRM, Rani, uh, integrated resource management player. Is it? Um, okay. I'm not an expert of this, but I can say that there could be more diagram like this, right? Which will say that how much of the business is being used by them, and what is the percentage of breakup that they have. So it look like airport, mining, and IRM are the major contributor. So if assuming will India will have more airport operational activities with Adani, will the existing airport revenue will grow up? Mining and IRM, if it is something, if it is increasing, maybe solar manufacturing is increasing and other things, right? So this actually give a better opportunity for Adani to also grow. So if you ask me, where I see the EPS is growing up with everything is in the right place for Dani, I believe that the stock can go up. Whether it will go up now or it will consolidate more and will go up is something to check. But where I will be more interested, I will be interested if the price drop from 2300 to maybe 1500. If that happen, and if EPS will keep increasing in the same moment, I think we should really, really think about this system, because then it can make multifold returns, right? And something like this, okay? So it was making 250, you can onboard. So if you buy something at 250, it can become 4000. So it becomes how many times? 10, 15 times, right? But if you enter at 120, then it is about 35 times. So my point is, a good company with a discount price can give you more money, right? And that's what I'm expecting. If we buy it here, it's fine. But first thing is that it can go down more because of other activities happening. But if we find it in a globally good discount rate, it is a better company. And I don't think Adani will have less profit from here. I don't think so, because they're doing really good in the business model. And previously, I mean, in 2022, there has been some complaints around, okay, that the PE was going up and the earning was not going up. But now the PE, which has tipped at 400, now it comes to 40, 50, which is pretty digestible PE. So a company is not really expensive. And I believe that with the structure it is now, and with the valuation it is now, it is still a attractive firm. Plus all the things going up, right, in place, everything is positive. I think this is a good bet. It should be part of my 20, if you ask me this way. What I'm waiting for, I'm waiting if it falls down more. If not, if it goes up, then how it should be, then I will think in a different way, assuming this will go up from here, okay? Then I will put Fibonacci, oops, and I will put something like this. Now it is at 38%. So when should I buy it? If it goes up from here, then I will buy it when it cross 78%, which is 3,500. So I will make more investment into it if it crosses 78% of current correction. Because I have seen in past that once a stock correct 78% and goes up, then it generally does not come down to the same previous low. That's a assumption. So, but use case wise, I believe it will come down, and then there will be opportunity for us to accumulate in the same level, and then it become double bottom, and then it goes up. That's a best case example. So same like this, I was trying to add these kind of comment. This is also open for you, I believe, but please look into this. Maybe see Indus IND. I don't know why I was saying this, but I think this is also um, a bank, right? Indus IND Bank, yeah. See this one. I mean, maybe there's something I missed, but this is pretty weird to me if you ask me. See, okay, something like Adani, yeah, this also. So the price was going up, then it corrected. Now it is also correcting again. It is trying to make a higher bottom. The EPS is going high. The PE is not growing, which means that the company is not costly at all. ROE has increased in past, but now it is not increasing, and that's the reason why the stock also has not performed at the moment. But if you ask me, if the next bull has to start, then these kind of companies make more sense, right? And that's why I have also written here, it could be 3x from here, because my assumption is the PE has about 10. Okay, the PE could be 30, which is what I'm expecting to be, which is itself is not high PE. It will still be a medium PE for this kind of stock, where the PE was 50 at some point. So even if the company becomes three times with the same kind of earning, this will still be of 30 PE, which is fine, acceptable PE, right? With this kind of company. So I have a belief that these kind of company could be good bet, because they are almost at a very throwaway prices. It's like discount prices, right? Sale is there on the stock. So it is good. It is pretty good. We have to just wait for earning to start. This kind of stock should be in the radar. And when the earning cycle start for these kind of stock, then we should onboard it. Yeah. I think Adani Green was also, but I think Adani Green has some challenges in past that, yeah. See, Adani Green, a point in life, it was about 5,000 PE. Unbelievable, right? So that was something where it was a crazy valuation price, because earning was almost zero that moment. But then the company earning from zero, it went to nine. I don't know how this calculate, but now the company is making good money. And I also add this point that with EPS growth, it should stop falling. Yeah, it should stop falling. Falling, I mean to say, this should come down. I also make a line here. And I have a belief that these stocks should also be part of the 20 stock that I'm talking about. So we have to discuss more, like what Adani Green Energy do, what are the capabilities or future prospect of the stock. Maybe there are more opportunities that what we see, or maybe less, but these are discount stocks already, and this should be in the radar. I will suggest you to go through this list. um, hmm, what else? I think this um, IDFC First Bank, that bank we already have seen. I was trying to see some of the other thing which is of different sector. um, Jubilant Food, JUBL Food, and I think we will close in 5-10 minutes. So Jubilant Food is interesting, yeah. And if you see, right, this actually has corrected, and it make the double bottom, and it look like it is going up. Okay, and if I invert the chart, it look like it make double top, and it's coming down, right? So sometime if you invert the chart, it gave you better prospect of what can happen. So it also is look like it has make a kind of a bottom, and now it's going up. So, but the only point is, will this kind of business will grow or sustain in future? I'm not pretty sure about it because of all this, you know, quick delivery apps and everything. Um,
Yeah, but this have entered this one, but I sold it. Not Jubilant Food, but the other one.
yeah,
Quick service restaurants, which is I think Burger King. No?
maybe.
RBA.
Okay.
Restaurant brand Asia. Take that one.
Which one?
RPA.
RPA?
Yeah.
Okay, I don't know this name.
Restaurants brand Asia. RBA. No, just RBA.
I
Third one.
restaurant brand issue. Okay. Oh,
So I exited somewhere in the
yeah, but if you see the
somewhere I have
earning was always in negative, so this was never a good company, and the P was going up. So this is good that you come out. You should never be in first. But I think this is a good decision. See, the debt is increasing. So this company, which is having a lot of loss in the business, trying to get more outside debt so that they can make more money, but they're still not able to make it. So normally, this kind of company then will fail at some point of time. You know, this is something that must to be avoided. I must say.
like QSR. No. I didn't add anything after this. QSR, quick service restaurants.
Yes, leave that. Okay. I think we cover all the major point that was needed. Um, from my side, I think it is a bit longer call than intended, and maybe next week we will try to go deep dive into the power sectors. But I think this is good enough. Great. Anything else you want to discuss?
No, I think that's it.
That's it.
I mean, now we covered everything. Let's see next.
Yes, I think very soon, Naveen, we have to come up with a 20 list. We have to, right? I think the base is ready, what we were thinking of. Now we have to. Even I will suggest you that next week you also go through the list that I have prepared, or maybe you can add your list. But we need to come up with those 20 very soon so that we can actually put a POC, like 1,000 rupees on each and see how it behaves. At least that's how I wanted to start at least. And if that POC is successful, then we will going to increase them more. That's the whole plan.
Okay.
Yeah. Okay then.
Yeah.
We'll see you next week.
Thank you.
Bye bye.
Then,